A very warm welcome back to the forum. And this panel focuses on Hong Kong's position as International Asset and Wealth Management Center. I'm Christina Choi, the Executive Director of Investment Products Division at the SFC. Today, I'm really delighted to have a panel of distinguished market participants from different industry sectors. Starting from my left is Mr. Dan Watkins, CEO Asia Pacific of JP Morgan Asset Management. Next is Ms. Doris Lian, Chair, Chinese Asset Management Association of Hong Kong, and Acting CEO of Bosera Asset Management International Company Limited. And then Mr. Ivan Wong, Managing Director and Co-Head North Asia, HSBC Private Banking. Mr. Ming Lu, Head of Asia Pacific and Partner, KKR Asia Limited. I think this morning we have heard a lot about Hong Kong's opportunities and actually as well as challenges. I think as you all know, the Hong Kong and the industry have been facing a series of unprecedented challenges, starting from social unrest locally, and then COVID-19 pandemic, geopolitical tensions between the US and China, and more recently, some structural and policy reforms in mainland China across industries from technology, private education, online gaming, and recently the debt crisis in the mainland property sector. But despite and amidst all these challenges, the Hong Kong asset and wealth management industry has enjoyed very robust growth in AUM over 20% and strong net inflows, as shown in SFC's most recent annual industry survey. And as you heard this morning from the Financial Secretary, the Hong Kong government strives to develop Hong Kong as an international asset and wealth management center, which is supported by the central government's 14th five-year plan with various cross-border initiatives with the mainland. I think you are all well known about this, all the Connect schemes, Bond Connect, and especially for the I think asset and wealth management industry, the launch of the GBA Wealth Management Connect, and also the first Asia Futures contract tracking the MSCI China A50 Connect Index in Hong Kong, and the Southbound Bond Connect also having been launched. And at the same time, mainland China is opening up its financial market more directly with wholly foreign-owned firms established onshore, having been granted full licenses to operate asset management and securities business and offer retail investment products. And the investment scope of QVs has also been further expanded, and QDLP scheme has also been reactivated in many cities in the mainland. So I think locally, the government has also continued to facilitate the industry with tax and other initiatives that I think you have all heard this morning about fund structures, tax concessions for carry interest, and also considering similar exemptions for family offices. So I think COVID also has accelerated the use of fintech and digitization across many businesses, including financial services. And the new normal and increasing regulatory and investor demands on ESG products. I think we just have COP26. So all these create both challenges and opportunities for our asset and wealth management industry. So today we have representatives from international and mainland background traditional asset management firms, as well as a very important intermediary, the private bank and wealth representative here, and also a leading PE firm, which is using Hong Kong as its platform. So I think to start off on this panel, I would like to go to each panelist to share with us, the top three issues or matters that would affect your industry or your business modes in the short and medium term. So can I start with Dan?
Thank you very much, and good morning to everybody. Okay, top 3 priorities for an asset management firm. I guess the great thing about working in this location, in this region, is I should start with a business growth one, a business opportunity one, and that's China. China is very much our #1 strategic growth plan. And obviously very closely related to that, we are incredibly supportive of the various cross-border programs that exist. So we've obviously had Stock Connect and Bond Connect, the quota systems with QDII and QFI. We were very supportive of mutual recognition of funds, and we had our first product right back in 2016 and continued to support that program. And obviously incredibly excited about the opportunity with the Greater Bay Area Wealth Management Connect. So we are very focused on that whole area of China, Hong Kong's critical role in being a conduit and gateway into that opportunity, and then the further development of these cross-border programs. So that's my #1. #2, ESG. I'm a believer that the whole sustainable investing development is going to have a fundamental strategic impact on the asset management industry. I think it's going to change every component of the asset management industry. And I say that with confidence because, frankly, it's already happened in Europe. I would say APAC, roughly 3 years behind the ESG journey in Europe, but is developing, and it's developing fast. I was looking at the data. In 2020, there was 10 times more flow into sustainable investing products than 2019. And then the recent data from Hong Kong IFA suggested that it's doubled again year to date this year. So client interest in sustainable investing flows is already happening, and I actually think the journey's only starting in this location and this region. So ESG is my #2, and I'm going to go with digitization as our 3rd priority. The whole development in the digital space has obviously had a significant boost with all the challenges we've all been dealing with in the last couple of years. And it's probably a word that's slightly overused, and we should be more specific about what we mean when we say digitization. But it is impacting how we manage money. It's changing trading. It's changing research. It changes how we engage with clients. It changes how clients are taking information and wanting to receive information. And it's changing the distribution landscape in terms of the new entrants into the marketplace. So I don't see that as competition. I see that as absolutely an opportunity for asset managers to work with these new digital entrants to the market. They're my 3.
Thanks, Dan. Doris?
Yeah. Thanks, Christina, and good morning, everyone. I think the top 3 issues that will impact our firm's business in the future are: first, the border of the connectivity has extended the boundary of Hong Kong's asset management industry. With the official launch of the GBA WMC and the Southern Bond trading of Bond Connect this year, I think Hong Kong's position as a cross-border investment center has been further consolidated. The wealth management demand from GBA residents will continually fuel Hong Kong's asset management industry in the future. Bosera is looking forward for it, and will provide more products and services in the future. Second, I think the renminbi internationalization will boost the requirement for the renminbi denomination product in Hong Kong. Hong Kong, as the biggest offshore renminbi center, is expanding their usage for renminbi, for offshore renminbi scenarios. In this year's policy address, the chief executive officer proposed to extend the renminbi issuance and the trading, extended issuance and the trading of renminbi securities, and encourage the use renminbi denomination in the Stock Connect Southern Bond. Meanwhile, the renminbi internationalization is a long-term goal for China government. And meanwhile, I think Hong Kong is lakes of renminbi denomination product, so it gives a scope room to offering this kind of products in the future. And the third is ESG. As ESG has become a new normal investing, we've observed that the pensions and the institutional investors is raising their bar for ESG. So asset owners is starting to divert the resources and the capitals towards the sustainable outcome. I think fund managers is moving on to this as well. As ESG, as Bosera, I think Bosera will following these trends, and we are putting our effort to make our ESG decision making in the reporting, in the strategies, and the overall integration. So that's all.
Okay, thank you. Ivan, on the private bank side.
Thank you, Christina, and good morning all. I guess Greek minds think alike. In fact, when we talk about the three top issues, there's quite a number of common topics among the panelists here. In fact, the first one that come to my mind is also the digital development. I think a lot of factors contribute to this very important trend. COVID certainly is one of the key factors. As we all know that we are now no longer able to travel as often as we used to be. We are also not meeting clients as much as we would like to. And I think working from home to a certain extent become some shape or form as a new normal. That's factor number one, but factor number two is a lot of our clients, okay, especially the first generations entrepreneurs, essentially reaching the age of retirement, and they are passing, their wealth to the second generations. And a lot of these second generations entrepreneurs are actually very tech savvy, and they actually expect more like an ecosystem of digital tools and solutions to accommodate their needs whenever and wherever they want to. Now, so what they are looking for is convenience, flexibilities, simplicities, and personalizations in the way they engage and bank with us. So in response to these emerging trends, we as a bank has invested very heavily in different type of digital upgrade. Say for instance, this year we have introduced what we call e-signatures. Essentially is an automated tool to facilitate signing, submitting, or receiving documents while the mobile phone or their laptop computer. We also facilitate, come up with solutions, basically enhancing how we communicate with our clients using the native social media channel, including WhatsApp, WeChat, okay, in instantly and also secured manner. Finally, we also invested heavily in introducing online trading, and currently we are able to trade stocks and ETF in 10 different stock markets globally, and we are going to enhance and and diversify into other asset classes in the very short run. So digital development is probably the number one. While digital or system or technology is very important, the second thing I want to mention is, of course, talent. Okay, I think we probably all agreed among the panelists, no matter you're in asset management or in the private wealth management business, it's a people business. And indeed, talent development is one of the most critical factors, in my humble opinion, for Hong Kong to continue to be a major financial centers and a wealth management hub. Now, and when I talk about talent, it's talking about both quality and quantity. We as a bank, of course, have been investing a lot in developing our talents. But across the private banking industry, in particular, private wealth management associations, PWMA, has been working closely with Hong Kong MA in introducing what we call a apprenticeship program, is for giving this type of internship opportunities for the local university students, for them to get a hands-on experience in the industry. Also, we're working very closely with the local educational institutions, in coming up with the right type of talents. In particular, I just name one, University of Hong Kong has actually introduced a dedicated program for asset management and private wealth management. And this year, we have seen the first batch of graduates already. And I think this is a very, very important step for us to continue to develop our talent here. Now, and one thing I want to highlight is when we talk about talents, we are not only traditionally talking about people that are familiar with the financial market or the investment business. Given that the factors I just mentioned, it's important for these people or these talents would be able to know about big data, talk about fintech as well as ESG. Finally, the last topic that I would like to mention, obviously, is China wealth. And I think undoubtedly China is probably the biggest and the most interesting market and the opportunities for the wealth management business and the asset management business here. And given Hong Kong's unique positions that we are part of China on the one hand, but we have been open and well connected to the international financial markets on the others, I think we are in a very well positioned to add values in this two-way flow. That means assisting the newly created wealth in China by using Hong Kong as the gateway to invest globally. On the other hand, we also, of course, helping the global investor to tap the investment opportunities in the second biggest economy in the world. I guess most of you know what H and S stand for in HSBC. We are definitely the largest bank here in Hong Kong, and we are the biggest foreign bank in China. So we are certainly keen to contribute and add values in this process. And as I've mentioned, we have committed very ambitious growth in both Hong Kong and onshore China in order to tap these opportunities going forward. I propose here to pass it to Ming for other comments.
As a global investment firm using Hong Kong as a platform, can you share your top 3 priorities?
Yes, thank you, Christine. Being the last to speak the 3 issues, you may feel a little bit repetitive. But I will speak my 3 priority issues from the point of view of our KKR operations in Hong Kong. We play a dual roles, both as the hub to China and also as a regional hub throughout Asia Pacific. So my 3 issues, first one is really about improving or increasing connectivities, not just physically, more digitally. And the second one, of course, I will talk about talent, but I will talk about in the context of if you roll the clock forward in the next 5 to 10 years, what kind of mix of the talent you really need in addition to what we're able to attract today. And finally, the Hong Kong's evolving financial center role which serves us very well as a regional hub. We hope that will continue to move in the same directions. So in terms of connectivities, we all know that Hong Kong's proximity to China is a natural advantage for Hong Kong. But in the increasingly digitalized world, those natural physical closeness to a market, which is a very important market, is not the insurmountable advantage anymore. So the important thing is to build more connectivities between the businesses, between the people, and coordination between the regulators. Hong Kong actually has done some good things about that. Christine mentioned that Stock Connect, Bonds Connect, and soon to be GBA Wealth Connect, and offshore RMB centers, and Hong Kong's physical infrastructure connectivity with the mainland, with the GBA regions is great. But on the digital side, I think that connectivity still needs to work. It's a work in progress. I think it needs to improve. So that part is actually very critical. If you think about in the future, more and more business will be done through the online digital channels, and that will become critical. In terms of the talent, Hong Kong actually has a very good way to attract the talent people, a mix of the talent with the English-speaking, increasingly Mandarin-speaking people. But our industry is fast evolving. You know, Hong Kong has this unique East, Mid, West culture. It's developed economy level of infrastructures, stable regulatory environment, favorable tax regimes, and even supportive immigration policies. Actually, very generally were quite good in terms of attracting the global talent to come to work and live in Hong Kong. And we hope Hong Kong will continue to maintain that. I will talk about the mix of talent a little bit later. And Hong Kong's evolving role as a financial center is quite important for us because of that, Hong Kong offers a full suite of the financial capital market services in investment banking, asset management, wealth management, as well as professional services, legal, accounting, tax, business consultants, and so on and so forth. It's very, very critical for us. This robust service network actually formed a very unique ecosystems for Hong Kong, which makes Hong Kong an ideal location for regional hub. Let me just come back, because all three important factors are resting on one single important component, which is a human capital. Hong Kong has been very good attracting the mix of the people, particularly for financial services and professional services. But our industry is actually very undergoing a very transformative sea changes, increasingly digitalized, increasingly technology enabled, and maybe someday will be blockchain based. So the right mix of the people that's good for today may not be necessarily adequate for tomorrow. If we think about the next 5 to 10 years, Hong Kong needs to broaden its appeal to the much broader categories of the people, and in particular, the people come with the digital expertise, data scientist background, cybersecurity expertise, the people who understand and can actually manage the blockchain infrastructures and blockchain-enabled businesses, and as well as the software service professionals for increasingly digitalized financial service industries. So this is a part I think Hong Kong still need to work harder on, and it is going to be very critical for us to continue to run the Hong Kong business as regional hub, as the China hub for the next 5 to 10 years.
Okay. Thanks, Ming. I think, a common theme is you all talk about is the China connectivity. So I think in this round of questions, I would like to focus a bit more about this aspect. I think as you all share, Hong Kong has the unique strength and proximity and et cetera, with mainland and a lot of connectivity programs. So maybe for Dan, I think JP Morgan, in the traditional asset management space, you have been long established in Hong Kong. You have a very large range of retail funds, and also you have a long investment in China as well, direct investment. You had a joint venture asset management firm, and you are, with the opening up of wholly owned asset management licenses in China, I understand you are going to convert into a full wholly owned license directly onshore as well. And can you share with us, how you see or using this opening up of China and the different pros and cons and strengths and challenges of each of this location, and how you make use of Hong Kong in all this process?
Yeah. So the opening up of the capital markets and the financial reforms we've seen across China and Hong Kong particularly in the last 3 or 4 years, has given asset managers various different ways of entry now into the market. And as you rightly said, the path we're taking is as a result of a strategic decision that people made way before me, when JP Morgan set up a joint venture onshore in China 17 years ago. Now, if you think about that, just like how forward-thinking and strategic that decision was 17 year ago, I get the benefit now as the CEO of looking at what we can do with that joint venture and maximizing the opportunity with the financial reforms that's happened. So yes, it's obviously public information that our path to China is to take 100% control of that joint venture, and it's called China International Fund Management, so CIFM is the name onshore in China, and we're working closely and waiting patiently with the CSRC to receive final approval on that transaction, and we're super excited about what that opportunity gives for us. It's 450 people, 450 asset management experts with 10, 15 years experience of what it takes to operate onshore in asset management. That's what you're buying. Yes, we get $40 billion of AUM and a great distribution network and a great brand. But that's the vehicle that we're going to operate with to manage all of our China initiatives. And I think what's really important when you think about an asset management strategy for China, I'm talking about a 17-year joint venture journey that will culminate in 100% ownership. My job is to lay out another long-term plan for how we're going to be successful onshore in China. And it's really important that we don't get distracted by short-term events. It's not going to be a linear journey. We're going to have good years and bad years, and embrace that and plan for your business growth over a 10, 15, 20-year journey. And that's how we're trying to approach it. The other key thing I think we have to do is listen and understand and learn what it takes to be a successful asset manager onshore in China. It's a very different market. It's evolving in a very different way. And the biggest mistake I think firms like JP Morgan could make is to think that we know how to do asset management and impose that into the China market. I think that's the surest way to fail, frankly. And what we need to do is capitalize on the fact that we're going to now be working with 450 new colleagues who know how to do this. And then the beauty of this is if we can maximize the blending of all that local expertise with the global expertise that we can bring, that's where we see the opportunity. But we're in for the long term. We're going to be very patient. We're going to be very thoughtful. But it's an incredibly exciting journey ahead of us. And those cross-border programs I referenced earlier, they almost become even more important. as I say, we're a big believer in the mutual recognition of funds program and being a big supporter of it. And we've got a collection of 6 funds northbound, 3 funds southbound. Once we get to 100% ownership, then we're going to put a renewed focus around that southbound effort for MRF. And I think we bring greater investment choice and fund choice to investors, which is what this should be about. If I may, I think there's a couple of amendments or developments we should be doing to the mutual recognition of funds program. I'd hope we can look at the 50-50 AUM composition question. I hope we can look at the delegation of portfolio management question. I really do, because I think it's a potential missed opportunity if we don't continue to evolve and develop that program. And I think it can be a really successful piece of the whole China-Hong Kong story. And same with Greater Bay Area. It's such an exciting opportunity. It's early days. We look forward to all working on developing and evolving that. So again, it works for investors and we're giving them maximum choice. But I think a combination of our efforts onshore in China and then evolving and developing these cross-border programs, it's going to be a fantastic opportunity. And I believe asset managers have a huge role to play in helping the development of the financial market in China. I really do. Like, we can bring real solutions to retirement investment propositions for investors, bringing more investment choice to investors, bringing investor education to investors. That's the role big global asset managers can bring, learning from the local players and then bringing some global expertise as well.
Thank you. Thank you. Doris, so I think Bosera has been set up in Hong Kong for over 10 years already. Yeah, and you are now the chair of the HKCAMA Hong Kong, right? You and your members represent many mainland-based asset management firms here using Hong Kong as a platform. Can you share with us, what, especially like the Wealth Connect and how you will be using Hong Kong in terms of the opportunities and, as you have the expertise of knowing the Chinese investment market, etc. You now do have some advantage and knowing what would be good for and their investment appetite and solutions.
Yes, thank you. I think Hong Kong's financial market has its unique advantage. And it has a sound and stable policy environment, and is quite tolerant for the product innovation. Its mixed operation model gives great room for the development of complex product. So we can see Hong Kong's investment banking, private banking, and derivatives service product all rank among the world's best. But in the contrast, the mutual fund or the fund industry is underdeveloped. We can see the number of the fund is small, and a relatively large proportion of the fund are registered in overseas. So it gives, I think it gives room to further enhance. It can be said that Hong Kong is a kind of fund distribution center rather than fund setup. So there's a room for further enhance in the value chain. Compares to mainland China markets, there are some the potential to improve in the following areas. First is to enhance the centralization, the standardization, and central financial infrastructure. The third is to enhance the level of investment education. And the third is to enhance the transparency for the information disclosure. I think currently, Currently, the Hong Kong's investment service level has its difficulties to meet the requirement for the mainland China investors. If the investment experience in Hong Kong cannot be adopted by the mainland investor, then I think Hong Kong has its difficulties to get benefit from the outflowing of the GBA investor. So the launch of the GBA WMC gives great opportunities for China managers to thrive. We have better, as you just mentioned, we have better understanding of our investors' investment habit and the requirement of services, and as well as the sound branding reputations in mainland China investors. So I think we will take this advantage to expand our business. Meanwhile, we will expect Hong Kong to continue to improve the ecology of the industry, such as strengthen the financial infrastructures, reinforce the industry standards, and maintain a healthy, competitive environment.
Okay, thank you. So you brought up a point about, maybe the distribution or the infrastructure, I guess, in relation to maybe connecting with the mainland investors may not be as advanced, I think, because traditionally we used to have a lot of personal service, especially Ivan will be more, you can comment more on that as a private banker. But I guess this is, with the opening up of China, and as Dan mentioned, very different target the investor base, their expectations and how they invest are very different. So, but Ivan, can you tell us about how you are seeing this mainland opportunities? And I think for the private banks, some have commented that the GBA Wealth Connect is more for the retail or the mass segment of investors rather than for the higher net worth individuals. But how are you seeing that, and opportunities, or are there other mainland related opportunities that you'll be focusing?
Yeah, thank you. I think as far as the GBA WMC is concerned, on this initial phase, given that the personal quotas is only 1 million renminbi, and also the product scope is restricted to what we call the low to medium risk, indeed, I think in this phase, I think it's probably more relevant to the high-end retail market rather than the so-called hardcore private banking business. But having said that, I think GBA WMC is indeed a very, very important step towards further economic integrations among the GBA cities. Now, I think let's put things in perspective. Guangdong itself, as a province, or as economies, is actually very, very substantially big. It has close to almost 70 million in terms of populations. And if you look at the GDP, we expected that it will reach $4 billion by the end of this decade, by 2030s. Now, and according to the also the statistics, currently, in Guangdong province, we already have 300,000 families with net worth over 10 million renminbi. So you can imagine that GBA actually represent another growth engine for the financial services business here in Hong Kong. Now, and indeed, as far as HSBC is concerned, my retail banking colleagues has done tremendous work in both sides of the border, to facilitate this two-way flow. So we are actually very optimistic that there would be subsequent phases of the WMC, probably in terms of a bigger aggregate as well as personal quota, probably more flexibilities in terms of the products, and I think equally important, hopefully more harmonizations of the selling process as well as the regulations across the whole GBA. In a nutshell, I think we are very optimistic about this scheme.
Okay, thank you. Turning to Ming, as a PE firm, how do you see what role that Hong Kong play in the life cycle of your investments and business, and what kind of innovations or technology disruption may affect Hong Kong's role in the short to medium term?
Yeah, that's actually a very good question, because we are looking at Hong Kong to support our investment management through the life cycle. So we do a few things. Hong Kong actually play a very active role for that. And I spoke about this before, that the full suite of financial capital market professional services capabilities in Hong Kong that actually can be very helpful to support our investment management throughout the life cycle, from the deal originations to due diligence support to transaction level support and offshore financing and deal structuring to post-investment financial treasury services, capital market services, and operational value-added services, and finally to exiting our investment. Of course, Hong Kong's public market is a very important venue for us to listing our portfolio companies and exiting our investment. When it comes to China, we actually have a lot of offshore vehicles sitting in Hong Kong, and we are actually fully leverage the Hong Kong's stable, mature regulatory environment to develop many bespoke financing solutions, capital structure solutions, and a host of the other capital market solutions. We also are leveraging Hong Kong's role as a regional hub, so we'll provide many critical services to all our investment teams throughout the region in legal compliances, treasury services, technology, IT, enterprise risk management services, human capital services, and in a host of other services. As we continue to enjoy very fast growth throughout Asia for our businesses, we actually have been adding a lot of expanding our teams in those critical functions in Hong Kong. So we're basically benefiting from the Pan-Asia growth. Last 5 years, we have expanded our operation pretty significantly. When we talk about innovation, we are either fortunate or unfortunate in the industry that's actually undergoing a very significant changes. We have to constantly facing a very tough choices between embracing, adopting those innovations versus being at the risk of being disrupted from those innovations. Just a couple examples. First, on the fintech innovations, many of you probably know, fintech innovations actually have partially disrupted a lot of banking operations in loan originations, assets transfers, product distributions, and payment. And on the other hand, those fintech innovations also pose a very serious challenges on cybersecurity and consumer data protections. So those are the things that we have to grapple with. And another one is probably more relevant to our industry, which I mentioned briefly before, is blockchain and tokenizations. It actually particularly relevant to asset management industries because we could see that either induce a significant change on what we are doing, or it will be very disruptive in the area of asset trading, asset authentications, asset transfer, product distributions. Even the fundraising can take in the form of tokenizations. So for us, those innovations will have a profound impact on what, how, when, and where, and with whom we will carry our businesses in the next 5, 10 years, or maybe even longer. I'm sure that also creates a lot of dilemma for regulators as how you can strike the delicate balance between regulating those newly innovative businesses to ensure a sound and stable financial systems, which we're all depending on, and continue to encourage innovations. And financial industry is one of the few industries that actually is mostly globally connected industries, where the innovations transcend the borders very easily and quickly. But not all the innovations will ultimately pan out, but now to being able to fully prepared for either adopting those innovations or prepare for managing the fallouts or disruptions is not an option for us. So we have been consistently monitoring, learning, studying, and in many cases adopting many of those new innovations, because we have to, otherwise we will not be in the business 5-10 years from now. I think that's probably the realities. And along the way, we also want to increasing our communication with the regulators, try to understand, gain the better understanding clarities on how regulators plan to regulate those newly innovative business and services so that we actually can prepare ourselves to embrace it. But that would be my quick take on the innovation.
Yeah, thanks. Wow, you bring up very, very interesting topic. But I think we'll come back to some of these digitization and maybe ESG later. But before that, I just want to have a very quick discussion about some of the government-led initiatives, or on tax or fund structures, etc., with a view to enrich the ecosystem of the industry. And how do you see these initiatives? What need to do more, or are you using it? So maybe first to Doris. Initiatives like the new OFCs. Regime, LPFs, and also subsidies or grants on OFCs and REITs and tax concessions. And how, what do you think about that? Have you used them, and why not?
Oh, thank you. Yes. Well, we are very pleased to see those initiatives rolled out by the Hong Kong government and the SFC. And I think this will no doubt to contribute the development of the industry. And in particular, in the fund structure, the introduction of the OFC structure gives the fund manager a new choice. In my point of view, I think the OFC structure has its certain strengths in the following areas. First, the OFC structure involves only a single jurisdiction, which gives its advantage over the overseas structures in terms of the certainty of compliance. Second, the OFC structure can benefit from Hong Kong's profit tax exemptions in most of the transactions. And third, it has a lower overall operation fees, such as registration fees, the direct fees, etc. Therefore, yeah, we are keen to take this advantage to develop our business. Actually, we've successfully launched a SFC authorized fund under the OFC structure recently. And I think we will continue to use this, take this advantage in the future.
Thank you. Dan?
Yeah, I agree with Doris. We welcome these developments as well. It brings back memories for me of one of the hardest projects I ever did 15, 20 years ago in the UK, when we moved all the UK unit trusts into the open-ended investment corporation, the OIC product. And so I can understand, I'm familiar with the OFC corporate structure, and as Doris says, it has many benefits, and particularly when you get into the details around tax and tax treaty. So we welcome these different investment vehicles. How do we embed them? How do we make them relevant? That's where we need to spend time as an industry. We can't just bring these things to the industry and then wonder why they're not like immediately happening. That won't take place. It needs to come with an industry calibration of understanding the benefits, the advantages, what role are they going to play, and all be clear on that. And then we go to the investors and do the investor education about the benefit. And I think we've all got a role to play in that. We also like the Hong Kong Unit Trust, to be clear. It's been a great product for us. We've been working with the Hong Kong Unit Trust nearly 50 years now. It's obviously embedded into the mutual recognition of funds program, so we're very conscious of that. It's also a vehicle I think has opportunity to be passported, to be used in other locations, and so if you're looking for a JP Morgan view, we like the unit trust, and we still think there's opportunity for that kind of vehicle, not just in Hong Kong, by the way, but have a broader regional impact.
Okay, thanks. Ming, have you used the limited partnership funds structures? And what do you think, are the key, criteria or impetus that would help to use that? And also any comments on the tax concessions on carry interest?
Well, the recent clarification on carry interest certainly helped a lot. I think for domicile questions, we usually have a number of considerations. I think a tax is a very important one. Hong Kong's tax is generally viewed as favorable and simplified, which is very supportive. But Hong Kong on the tax, Hong Kong has something that they can do better, which is the entering more bilateral treaty agreement with more jurisdictions, because the fund structure, LP fund structure, is essentially a flow-through structure, and whereby the ultimate beneficiaries, many of them are state pension funds and is tax exempt, don't want to be subject to dual taxation, double taxation. So the more treaty you can enter, the better for us, because if we set up a fund, if half of the LPs have subject to additional tax versus other jurisdictions, you will have an issue there. The second is really, this is the tax issues. Second is really the operational administrative cost, as well as the critical supporting professional services network, which I mentioned that part Hong Kong actually scores very well. And because of that, we actually are able to operate our business here fairly efficiently, so that can help lower the administrative and operational cost. And third one is, I'm going back to my talent questions, is Hong Kong's ability to develop and grow local administrative and professional service talent with English-speaking, increasingly Mandarin-speaking capabilities. So those are the few factors. You put them together, I think Hong Kong does offer a generally very supportive picture for us. So we are actually seriously thinking about more domicile into this location.
Okay, thank you. So Ivan, any comments on, probably your family of the prospective tax concessions for family offices from any responses from your clients?
I'll probably keep my comments brief in the interest of time. But the short answer is, I think there's a lot of good works being done, in Hong Kong to attract more family office to, establish their presence here in Hong Kong. Say, for instance, Invest Hong Kong has actually recently established a specialized team to facilitate that. We just talked about, Hong Kong government is looking at the possibilities of tax transactions, and LPF, obviously is a very well welcomed by the prospective family office, and indeed because they can use these private fund structures to hold their investments here. And if my statistic is correct, there's been over 300 LPFs has been established since August last year. So I think definitely well welcome, and let's continue to work together in reinforcing Hong Kong as the choice, okay, for a family office here.
Okay. Okay, thanks. I think we're running short of time, but I think lastly, I just in this last few minutes, just a couple of questions on maybe Ming, you want to talk something about ESG opportunities and challenges, and first.
Yeah, let me just quickly cover that. I think ESG is a very important topic. We actually established our ESG program long before the ESG became a buzzword. So this is more than a decade ago. So we actually established a decade ago dedicated ESG team and ESG management process, policies, tracking, reporting mechanism. So for us, ESG actually serves a very clear purposes towards our investment and asset management strategies in a number of ways. The first is really ESG is part of a long-term investment value creation strategy. Today, ESG is a gating issue. If we are looking at new investment opportunities, ESG is at the top of the funnel in the due diligence list. So you have to go through that. Post-investment, we would introduce ESG policies and proper governance structure to track the progress of ESG programs and measure it. And we do the report. We issue a quarterly report for our internal governance body and annual report to our external LPs or investors. And that actually serves us very well for our investment process management. And ESG also becomes a very attractive investment theme. So we raise the global impact funds, specifically investing in the businesses that can actually deliver real measurable impact on each category of ESG. And finally, I think ESG is actually a long-term brand building and risk mitigation tools. As large society increasingly embracing ESG, there's unimaginable if you want to have long-lasting brands without making significant contribution to the positive impact on ESG. So this is very critical. Now, private equity industry, in my opinion, is actually ideally suited to manage ESG matters. Because if you think about it, we are the long-term capitals. We don't bother by quarterly earnings. So we can actually make a long-term capital commitment, and we can engage structural reform to necessary to meet the objectives. Because many ESG programs take multiple years actually to deliver the results. And we are also investing in a much wider range of industry sectors across many geographies. So if we are delivering results, it actually is impact on a much broader base. We also use that to engage cross-industry, cross-geography benchmarking to drive the better results. And finally, we are at the forefront of servicing increasingly large number of institutional investors. They are increasingly embracing ESG since clear signal that this is where the asset allocation trends and capital flow directions is going. So when the capital speaks, we have to listen. So ESG is a real serious commitment from ourselves in terms of resources, governance structure, culture adjustment, as well as serious effort to collect data measuring the results. But we have to do it. This is where the puck is going, and I'm glad we are actually tag along in the same directions.
Okay, thank you. So Dan, on digitization, I think I think JP Morgan has its own distribution platform and use a lot of digital distribution, etc. But it's more than distribution, right? So can you tell us a bit more how you are using focusing on this area?
Yeah, absolutely. I think this location, I think this region is the perfect markets to expand and explore digitization. I say that because as we all know, we don't work with a harmonious set of markets. It's very distinct markets across the region. Every market's different. The client segments within those markets are different. And therefore, the challenges we're all dealing with are very complex. Technology, automation, digitization, that's the solution to that challenge. And I think like strategic priorities, they get the focus when there's a problem to fix. And I think there's a problem to fix. And that's why I think we're all going to be investing meaningfully from a technology perspective into our businesses. And I would give you 4 or 5 areas very quickly. I think money management will change. I think portfolio management is changing. I think machine learning, AI capabilities is changing research. And you can now have thematic approaches to generating research, scanning huge amounts of data to generate recommendations that can sit alongside traditional fundamental research. That's already happening. The technology advancements in trading are unbelievable. That's been happening for 5 or 10 years. So I think the portfolio management is definitely one space. I then think how we're engaging with clients is dramatically changing. We are seeing clients looking for more self-servicing capabilities from technology, and they're looking to be able to pull data, pull information directly themselves, not sit waiting for a quarterly client report. Those days are gone. So the ability to kind of allow clients to self-serve using technology is huge. And then I do think there's a huge set of new entrants, virtual banks, digital clients in the market, and they bring amazing distribution capability and have a reach into a new set of clients that maybe traditional asset managers can't reach. If we can work together, that can be a fantastic combination. So that's how I think about digitization.
Yeah. Thanks, Doris. I think mainland firms have really huge, is way ahead in terms of the use of technology and digitization in their business. So how do you overcome some of these, challenges like talent shortage and et cetera, here in your business?
Yes, I think digitalization is the new trend in the industry, and this new trend has disrupted the traditional distribution of the funds and business model. And with the outcome, with increasing the demanding of the digital service from the client, we will see. We have put a lot of effort to upgrade our systems and using technologies to fulfill to meet this requirement. You mentioned the talent. As I noticed that most of our Chinese peers, we will outsource the system development to the domestic professional teams, or even to our head offices. So system development is not a big issue for us so far, but limited by the, limited by the lack unified data standards and central financial infrastructures in Hong Kong. We spend a lot of time for the to do the data governance, so which limits the widespread use of the technology.
Thank you. I think, I've overrun this panel, but I think maybe just a couple of quick questions from the floor that, for this panel. And I think first for Ivan, can you tell, there's a lot of, I think Ming talks about ESG and the demands. Do you see a lot of demand for ESG products from your client base?
Oh, indeed. I think ESG has now become more or less a core, indispensable, themes for the private wealth management. I think there's many factors contributing to that. I mentioned about that our clients are actually getting younger, from the first generations entrepreneur passing to the second generations. And actually there's also some new, younger, first-generation entrepreneurs. Now, a lot of these younger generations, they are actually very passionate, okay, by doing good to the world through their investments. This is number one. And number two, actually this goes beyond just a feel-good factor, because indeed, say for example in China, I think President Xi has already pledged, for carbon neutralities by 2060. Okay, that would actually trigger a lot of transformations in many different industries. Okay, say for instance, renewable energies, electric vehicle, and the list goes on. Now, so a lot of these ESG-related theme would actually translated to hopefully superior investment return as well. So we do see a lot of demand, and in fact, based on a recent PWMA surveys, currently there's only around 7% of our members' firms have more than 10% of their AUMs in the ESG. But all of these firms, or I would say that in 5 years' time, we expect that there will be more than 70% of our members' firm would have more than 10% of the AUM in ESG. So I think the trend is very, very clear.
Thank you. So Dan, the question is, if for a asset manager that does not have a presence in China, what is your advice to them?
I'll try and do a 30-second answer for you.
30 seconds, please.
Think long term, have a clear strategy, stay focused on the long-term strategy, don't let the short-term distractions take you off course. Listen first and be willing to learn. There are aspects of the China asset management market where if you've been working in the global market, you need to unlearn what you know and relearn. And being willing to do that is a really important skill. They would be some of the core characteristics I would approach to being successful. We've got a long journey to go ourselves, but we're going to try and follow those key competencies.
Thank you. I think with that, I think I'd like to give a round of applause to all our panelists today, and thanks for their sharing. And we have heard a lot of opportunities, positive, things in the horizon, but as well as challenges that we will be in this journey together. Thank you.
Thank you.